Do you know why 90% of all people will never be able to succeed and make a lot of money in the cryptocurrency market? Most of people don't have a clear investment strategy. Subscribe to this channel. Here I describe what professional investors do, how they earn and increase their capital. Subscribe to this channel to be among these 10% of successful investors. In this video, I will describe absolutely the most important 5 steps that 90% of all traders in the cryptocurrency market do not take. So stay and check which group you belong to. I am a trader and professional asset manager. My job is to manage an investment portfolio of several billions of dollars. That's why I have a lot of interesting for you guys. So stay with me, this video will be very useful for you. So let's start. What are these 5 critical steps? All 5 points are related to the following trading system. So do not worry, everything is easier than it sounds. There is no success without a systematic approach. So stop, wait to turn off this video if you think it's boring or not too cool. Here's a real example. I know personally a trader who has worked in a large US bank and has shown very good performance over the years. He quit his job and decided to manage his personal portfolio. Unfortunately, his performance dropped dramatically as he began to work independently. After some time I talked to him, he told me that his main mistake was freedom of action. At the bank, he is used to follow a system of risk and well-built trading algorithm. All this consists of many different processes after and before buying or selling an asset. And he thought if he stopped following all these steps, he would become even more successful. He thought that all these processes were holding back his big potential. But everything turned out to be the opposite. The built multi-level system of the trading process helps to systemize trading and eliminates mistakes. Therefore, after a poor performance, this trader built a similar trading system that he had in a bank. After that, his performance improved. So, stay with me and I will tell you what are the main 5 steps are. All these steps are very important for improving performance in trading and investing. These are the fundamentals principles that most professionals adhere to. After the implementation, all these processes, even a beginner will be able to show better results than a person who has been trading for a long time in the market without a trading system. And very interesting fact, it is suitable for both beginners and those who have been on the market for a very long time. Especially if you have been in the market for a long time, write in the comments how many points do you follow. It will be very interesting for me. It seems to me that many people do not follow them. Write in the comments how many points you adhere to. Hopefully I'm wrong. And so, let's start. Step number 1. Define the entry point. So, first of all, it is necessary to determine the buy point. This is step number 1. To do this, we open a price chart, we find the buy point, we determined the purchase price and made this level an entry point. If you want me to make a separate video how professionals search for entry point, write me please in the comments below. So, step number 2. Define the stop loss. The next step is to plan where the stop loss will be placed, the level at which the trade will be closed in order to avoid further losses. The third step is to determine the take profit, the level at which the profit from the transaction will be taken. Now, the most important thing is what 90% of all investors and traders in the cryptocurrency market do not follow. Step number 4, to keep a trade journal. Step from 1 to 3 should be written in the trade journal immediately after the transaction is done, and no case it should be done in mind. So you can imagine yourself working for a large investment fund. There, each transaction must be documented. So, and how apply this? The first option is to have a separate notebook, but it's the best to write down all your trade in a simple Excel spreadsheet. You do not need now any special programs or complicated spreadsheets. In the beginning, the simpler the table is, the better it is. For example, such a table might look like this at the beginning. First of all, a day of purchase. Then you have a name of the cryptocurrency, volume purchased, then the purchase price, amount of dollar paid, and also stop loss level. This is followed by a small path to separate purchases from sales. Then the date of the sale, the amount of cryptocurrency sold, and the price of the sale. At the end, there is a place for comments. This table helps you to follow your trading strategy. I leave a link to the table for you in the description below. Do not buy without thinking about all these points, fearing to miss the move. Someone sees that the price is going up and think, hey, I have to hurry up, I have to buy really quickly. Here is a very bad example. I think or feel that there will be a grow now. I need to buy now, faster. And what will happen in the next? It's not important. I will decide later. No, please do not follow this mistake. Also, the following bad example. Where to take the profit? I don't know. Now, it doesn't matter. I will decide later. So, how it happens in the reality? In the best case, the profit is taken after the price growth stops and the price starting to follow. And only then you begin to take profit if it still remains. I hope that you don't do all these things like that. If you have written all steps down, then by applying the trading result will immediately improve. After determining all 3 key levels, the level of buying, taking profits, and level of limiting losses or stop loss, the deal can be opened. After you have it written on paper or in a table on your computer, you can go to the trading terminal and click Buy or Sell button. After a trade is closed, an analysis of the trade follows. What was wrong with this transaction? For example, if the trade was closed at a loss. Look at your mistakes, trying to figure out what went wrong. You need to look for those criteria that were not taken into account before opening a trade. For example, what you could not see or understand at the time you opened the deal. Why did the price move in a different direction? What were the reasons? It can be that you went against the big players in the market. You need to determine the reason first. It's not correct to immediately open a second, third or fifth trade in order to cover the loss. It's a very important point. For example, you can ask yourself the following question: what should you do differently next time? Or what should you improve in making the next time? And a very important point, this trade should be included in the statistics, even if it was a losing trade. Such trades will help you learn and avoid largest losses in the future. So, we talk about 4 main steps. And the last, 5th mistake is not to be subscribed to this channel, because on this channel I tell you every week and share my professional experience of working with billions of dollars in investment in traditional capital markets. All this information is very easy to apply in the cryptocurrency market. That's why subscribe to the channel and see you in the next video.